Welcome to the Hurst Trading Room. My name is David Hickson and this is a video update for the 20th of July 2015. As always, before we take a look at the markets, please make sure that you have read and understood these disclaimers. Now, I've been asked via one of our chat facilities whether I would be interested in doing these Hurst Trading Room videos live, as a live trading room or a live webinar perhaps, and I would be very interested in doing that. I love doing live webinars. When we were beta testing Sentient Trader, we started a tradition of doing a weekly webinar, which was something that I did for several years. I love doing them. One of the complicated issues with doing a live webinar or a live trading room is when we do it. When do we all get together? We have Sentient Trader users and Hurst Signal subscribers all around the world in a multitude of different time zones. So to help us put this idea together and work out whether it is a viable idea, please go and fill in a very short survey. Answer just a few questions about whether you would like to see the Hurst Trading Room live. And there's the link on your screen. It's http://0s4. That's a 0, not an O. 0s4.com/r/HT live in capitals. Please go there and quickly fill out a survey. Let me know whether you would be interested in doing the Hurst Trading Room live. If we do it live, we will still record the sessions and post them to our podcast channel. So if you're unable to attend live, the experience will be very much the same. But please let us know. I'd be very interested in doing it if there is enough interest and if we can reach an agreement about what time to do it. Let's take a look at the markets, and I'm hoping that today's video is going to be a short video because I know how valuable your time is. I'm thinking it might be a short video, although I tend to go on a lot, I know about these things, but I'm hoping it'll be a short video because there isn't really very much to say. The markets are bouncing out of a 40-week cycle trough, which formed, as I discussed in last week's video. There it is. It's very obvious in all of our charts. Last week I discussed a possible alternative in the Nasdaq, and we'll look at that in a moment, and you'll see how that is no longer a likely alternative, not even really a possible alternative. At any rate, all of our stock markets have formed the 40-week cycle trough, and that's fantastic. Of course, we've been expecting this 40-week cycle trough. Somebody asked me in an email, how long have you been expecting this 40-week cycle trough? And the honest answer is ever since this trough was identified as being an 18-month cycle trough over here in the middle of October, and we identified that trough, or I was fairly convinced that was an 18-month cycle trough just a week or so after the formation of that trough. And so as from that time, as from late October, of course, I've been expecting a 40-week cycle trough to form roughly 274 days after the formation of that trough. And that's one of the fantastic things about working with cycles, is that as soon as you are able to position a trough, the next section of road ahead of you, if you like, becomes clear, because you know that you have a certain list of cycles, the nominal model of cycles, and you know that after an 18-month cycle trough, roughly 274 days later, and you can see in this particular case it was 264 days later, you know that then a 40-week cycle trough is going to form. Of course, we have to bear in mind the principle of variation, which tells us that cycles constantly vary, both in terms of their wavelength and also in terms of their amplitude. And so with the principle of variation in the back of our minds, as we approached the expected time of the 40-week cycle trough, we needed to stand by for it, as I discussed last week. So now that that 40-week cycle trough has clearly formed in the markets, and I don't think there could be much debate about it, I haven't seen anybody coming up with alternate suggestions. That trough is almost certainly of 40-week magnitude. There might be some analysis options which mark that trough as being perhaps a stronger trough, perhaps even an 18-month cycle trough, but let's not go into that now, because I don't think it's very likely. I think that the most likely possibility is that that is a 40-week cycle trough that formed, what was it, 2 weeks ago now. Let's quickly talk about what's going to happen next. Of course, trading using the FLD trading strategy, we trade interactions between price and the FLD, and the first interaction following an 80-day cycle trough, and there's that 80-day cycle trough marker, that cyan colored diamond. Following the formation of an 80-day cycle trough in the markets, the first interaction between price and the FLD is the A category interaction. This is clearly our A category interaction. It was a difficult interaction to get into and to trade. There was a tremendous amount of volatility preceding it. Take a look at last week's video for a more in-depth discussion about that. But nevertheless, it's a very good, clear A category interaction in terms of price rising up to the target. So let's just see. One could argue that this was G and that was H, and therefore the interaction actually occurred at that level. Let's consider that as being the level 2070, the level at which the interaction actually occurred. That means that our target for that move is somewhere around about here, 2105, I think roughly was the target. So that's our T2 target for this move. So as you can see, that that projection was fulfilled last week, which is typical of an A category interaction between price and the FLD. It usually meets its target and usually exceeds it a little bit before price returns to the FLD to enact a B category interaction. And a B category interaction is usually an interaction where price finds support at the level of the FLD. It then usually tracks along the FLD for a while until it bursts upwards again in a C category interaction. Now, that is our expectation in terms of the FLD trading strategy. But there are various other things that we can look at in order to determine whether price is going to find support at the level of the FLD or is it going to drop below the FLD. There are some B category interactions where price drops down below the FLD. They aren't very often useful trading opportunities, in my opinion, but let's discuss some of the details. Now, under what conditions would price plunge down below the FLD in a B category interaction? The conditions are really very simple. If the underlying trend, in other words, the combined effect of all the longer cycles than the cycles that we are considering, if the longer cycles are all pushing down, if the underlying trend is bearish, then we would expect a B category interaction to have price drop way down below that FLD. Now, is the underlying trend at the moment bearish or is it bullish? What's going on? How can we work that out? Underlying trend is a fascinating discussion, and I could speak for a very long time about underlying trend, but the first thing that is probably worth saying, let me zoom all the way out and just have a look at a bigger picture. When you're considering underlying trend being, of course, the combined effect of all cycles longer than the longer cycle that we are considering, and the longer cycle in this analysis is the 54-month cycle. So actually, let me just quickly display some semicircles in this chart. And let me show you what underlying trend does, if you like. Here is the semicircle of the 54-month cycle. That's the orange-colored semicircle. It's an orange-colored cycle, according to my settings in Sentient Trader. And so you can see we expect price, of course, to bounce out of the trough. And as a very, very rough guide, you would expect price to kind of move in a sort of well, it should really be a sine shape roughly, but the semicircle provides a good way of visualizing it. So you can see that initially price did pretty much ride up that semicircle, okay? Then it started coming down again, then it came back up to the semicircle. So up until around about here, until about halfway through that 54-month cycle, that semicircle was containing the price movement. And Then something interesting happened. Price dropped down to the second 18-month cycle trough over here in late 2011. Then price bounced up and it left the semicircle way behind and started shooting upwards. What does that tell us in terms of underlying trend? That tells us that the underlying trend is bullish, because if the cycle shapes that are formed in markets are fairly symmetrical and make nice M shapes, then that means we have a neutral underlying trend. If the cycle shapes that are formed in markets are very much distorted to the upside, then that indicates that we have a bullish underlying trend. And of course, conversely, if the cycle shapes that form in markets are distorted to the downside, that tells us that we have a bearish underlying trend. So, looking at this chart, you can see very clearly that we have a bullish underlying trend. However, I have been noticing and writing about and observing and commenting about various bearish signs that have been appearing in the markets recently. And so, in my opinion, the underlying trend is weakening. But now, underlying trend is a bit like proving someone's innocence or guilt. You know, somebody is innocent until proven guilty, or at least they should be. And underlying trend is bullish until it is proven otherwise. Okay, so you must be very careful about jumping to the conclusion that underlying trend has changed. We have seen no evidence yet that underlying trend is bearish. It is still bullish until proven otherwise. Many analysts will speak about the concept of price forming higher troughs or lower troughs, okay, and effectively they're saying the same thing. You know, you're looking at the cycle shape. So here you have a sequence of higher troughs in the 80-day cycle, and then you get another higher trough in the 80-day cycle, and then you get a slightly lower trough in the 80-day cycle. But that was, of course, also a 40-week cycle. So you look at the last 40-week cycle, and the move from this 40-week cycle to this 40-week cycle was strongly upwards. Let's look at that cycle shape, and it's worth zooming in and sort of repeating that because I rushed it a little bit. Let's look at the cycle shape of this 40-week cycle. Here it is, the move up to the first peak, down to the 20-week cycle trough, move up to the next peak, down to the 40-week cycle trough. Now that is an M shape, as I hope you can see. It's a fairly distorted M shape, but they usually are. And is it a bullish cycle shape, or is it a bearish cycle shape, or is it a neutral cycle shape? It's definitely a bullish cycle shape. There are two ways that we determine whether a cycle shape is bullish or bearish. The first has to do with the relative levels of the troughs, and it's very simple. If the cycle ends higher than it started, then that is by definition a bullish cycle shape. And if it is a bullish cycle shape, it indicates that the underlying trend for the 40-week cycle in this case is definitely still bullish. The other factor that we use to determine the bullishness of a cycle shape has to do with the position of the peak in terms of time. And so the peak in the cycle, does it occur early or late? Well, now the highest price that we saw in this 40-week cycle was over here. I don't know why my pen refuses to draw dots for me. Here we go. It was in early May, and so you can see that that peak occurred definitely late in the cycle. It's obvious. Okay, it occurred, I don't know, what's that, about 4/5 of the way into the cycle in terms of time. A late peak is a bullish cycle shape, or gives us a bullish cycle shape. A bullish cycle shape implies that the underlying trend is still bullish. So we still, in my opinion, have a bullish underlying trend. However, I have started seeing some bearish signs, which means that I think that the underlying trend is beginning to lose its strength as a bullish force. I don't believe it's turned bearish yet. There are many people out there that are crying bear, and they're saying we need to prepare for the markets turning down immediately. I don't think so. Yes, I think the markets are turning down, and in a moment we're going to speak about what's happening in the longer term. But I'm not bearish yet in terms of underlying trend. I don't think the underlying trend has turned bearish yet. Now, what is one of the weakening signs that we have been seeing? Well, if we take a look at the two most recent 20-week cycles, you can see here is that shape for that 20-week cycle, and you can see a very late peak, okay, in the 20-week cycle, and a much higher trough. So that's a very bullish 20-week cycle. The next 20-week cycle had a peak which occurred about halfway through the cycle, and it had a trough which was only slightly higher. So here we had a bullish cycle. Oh, it won't let me write a U. Bullish, perhaps I shouldn't write with this pen. Bullish and bearish. Here's, no, sorry, this is not a bearish cycle by any means. This is a neutral cycle. Okay, so we had a bullish 20-week cycle and a neutral 20-week cycle. Now, you might argue that that is a move towards bearishness, but notice that we have what I call the upside cycle, which is the first 20-week cycle, and then we had the downside cycle. We expect the first 20-week cycle in any 40-week cycle to be more bullish than the second one. Or, to put it differently, we expect the second 20-week cycle in any 40-week cycle to be less bullish than the first one. So that sort of shifting from a strong bullish 20-week cycle shape to a neutral cycle shape is not unusual. It is to be expected. Did it happen a little more than it might have been expected to have happened? No, not really. You know, it wouldn't surprise me to have seen a bullish cycle followed by a bearish cycle. So, although there have been some bearish cracks appearing in the markets, and I do believe that the bull is waning, it's losing strength, I don't believe that it has turned bearish yet. Now, on Friday, I posted a blog post to the Hurst cycle site and also to the Sentient Trader blog. Please take a look at it, because I believe it presents an interesting way that I tend to look at markets, and that has to do with the symmetry that forms around troughs. Let me zoom in here, and I'm not going to sort of do what I did in the blog post and show you a mirrored graphic. But what I can do with this bar count is I can show you how symmetrical this price move has been around the 40-week cycle trough. If we go back 14 days from the 40-week cycle trough, we would have found ourselves on this bar over here, which was the 22nd of June, and you can see the range of price for that bar over there. If we go forward 14 days, where do we end up? We end up on today. Where is the price today? Can you see that it is exactly within the price range of the bar 14 days before the price trough? Now, this price move doesn't look very symmetrical, but in fact it is in terms of the basic details. There's the price move into the trough, and there's a price move out of it. That's a really bad drawing, but I hope you can see that there is in fact a very symmetrical move that is playing out. Now, symmetrical moves, in my experience, always play out surrounding cycle troughs, even on an intraday basis. It's a very useful tool, and I use it often. But the symmetry always eventually breaks down, by which I mean the move stops being symmetrical. And in what way does it break down? Well, let me just draw here a symmetrical move, very roughly. I'm trying to sort of mirror that move with what happened before. Now, you see, if price keeps on being symmetrical, and take a look at my blog post because I do present an example of this. I show a graphic which shows the symmetrical price movement. If the price move continues to be symmetrical, then Would that tell us anything, or would it just be a pure chance? In my opinion, it gives us information about the underlying trend. Because if the underlying trend is neutral, then symmetry lasts longer. And I've seen symmetry last a really long time. Give or take, some small details. I've seen symmetry in some markets last for months, and prove to be really useful information for trading that market. So let me repeat that. If the symmetry lasts for a long time, continues to last for a long time, then that indicates that the underlying trend is neutral. So if we have worked out that the underlying trend is neutral, then we should expect symmetry to last for a fairly long time. If, on the other hand, price breaks down and fails to keep up with the mirrored price action and drops down quickly, then what does that tell us, or under what circumstances does that happen? Of course, it happens when the underlying trend is bearish, because the support of the longer cycles isn't enough to keep the market moving symmetrically, and therefore price moves downwards. On the other hand, if price leaves behind its mirrored price action and shoots to the upside, and of course I don't have enough space on this chart to draw that, then that indicates that the underlying trend is still bullish, or that's what happens when the underlying trend is bullish. Now, as a matter of interest, it's always a good idea to drag your charts down a little bit, because the top of the chart or the bottom of the chart can often form an artificial level for us. And in considering things, you must be a little wary of that. Perhaps I'm the only person that finds that, but very often, if I have the top of a chart over here, I think, well, obviously it's impossible that the price could go there, but it's not impossible at all, as we will see in a moment in terms of the Nasdaq. So I've mentioned that underlying trend should be considered bullish until proven otherwise, and so I believe that the underlying trend is still bullish. I do also believe that it is weakening, so I'm not expecting another several years of bullish price action by any means, but I do think that we are probably going to see the US markets, and the European markets are slightly different, but I do think that we're going to see the US markets break away from the purely symmetrical price action to the upside. Okay, so we might see a bit of a dip coming down now, and then we might even see some new highs. That's one thing to bear in mind, because I do think that the underlying trend is still bullish, but the underlying trend might have weakened so far that it has become neutral, in which case, of course, we'll see an extended period of symmetry, or it might even have weakened so far that it shows itself to be bearish. The other important thing to bear in mind is that as price comes down into the next 18-month cycle trough, which of course it will, and now I'm looking ahead a little bit further. I said I would look ahead a little bit further. Here is the 40-week cycle FLD, which I have spoken about in the past few videos. I mentioned that when price drops down below the 40-week FLD, I would expect it to resolve to the to below that FLD and remain below that FLD all the way down to the to the next 18-month cycle trough, which is of course this trough that we expect here in early next year, March or April of next year. Notice interestingly how, and let's just zoom in here a little bit, how price has interacted with this FLD. FLDs are such powerful lines. Notice how price came down to the FLD, found support at the level of the FLD for about a week, and then it broke down below it, formed the 40-week cycle FLD, and it has bounced straight back up to the level of that FLD. Isn't that interesting? It is now slightly above it, but as I mentioned in last week's video, when you're looking at a very long-term FLD, it is probably best to consider that, or a long cycle wavelength FLD. It's probably better to look at it on the weekly chart. So here's that 40-week FLD on the weekly chart, and you can see price is above it so far. I don't expect the price cross below the FLD to be absolutely clean. particularly on a very long FLD, the 40-week FLD. I really wouldn't be surprised to see it bouncing up a little bit and coming back down to the FLD. I do eventually expect it to resolve down below that 40-week FLD, but it might spend several weeks, who knows, maybe even 3 months or so, playing around with that FLD line. It's going to be very interesting to keep an eye on the interaction with that 40-week FLD. So to come back to the whole purpose of this discussion, is the B category short trade going to be an interesting one for us to take? I don't believe so, no, because I don't believe that there is strong enough evidence that the underlying trend has turned down, and so I would not be interested in entering short. If I miss a trading opportunity, well, that's bad luck, but I won't have made a losing trade. But I am certainly expecting the FLD to provide some kind of support as price comes down. Keep an eye on the symmetry as a matter of interest. Use a graphics program and flip that chart for yourself and keep tracking it. Symmetry is going to provide us with some very interesting information until, of course, the symmetry breaks down, which it always does. The market never remains symmetrical forever. Speaking of symmetry breaking down, and just one more quick word about symmetry. Let's take a look at the symmetry that surrounded this 18-month cycle trough, so that I can highlight a few points for you. Let's go back to the troughs that occurred before that 18-month cycle trough. There we have 67 days, a typical, perfectly average 80-day cycle. 67 days before the 18-month cycle trough in the middle of October 2014, there was a trough. What about 67 days afterwards? There's 63 days, there's 67. So it was 4 days out. Not perfect symmetry, of course, but there was certainly some symmetry. Let's take a look at these peaks here. There's a peak at 25 days. Did we get a peak at 25 days? Not really. What about this peak here at 41 days? 41 days is over there. It's very close to that peak that formed over there, only a day or two away from that peak. And we can keep doing this. You can play with this on your own charts. That's 82 days, and here we had a peak at 77, 5 days difference. Not perfect. Of course, the further you move away, the less reliable the symmetry becomes. 182 days. Let's see what we had at 182. Not very good there. But how about this one? 253 days. If I go forward 253 days, that would have been there on the 24th of June. And of course, our trough occurred just about 10 days later, or 2 weeks later perhaps, on the 7th of July, 6th of July, 7th of July. So symmetry is a very interesting thing, and I think it would be a good idea to keep an eye on it. Let's take a look at some of our other markets, and in particular I wanted to take a look at the NASDAQ, because the NASDAQ, in last week's video, I spoke about a possible alternate analysis that looked good in the NASDAQ. It didn't look very good on the other instruments, but I thought it was a useful analysis to keep in the back of your mind. Now, as a matter of interest, some people get very worried when you start speaking about alternate analyses, and they're saying, but hang on, I want to make clear, simple trading decisions. And as I mentioned in last week's video, I was considering the possibility that the 40-week cycle trough had occurred, I think it was over here, and that this was therefore a 40-day cycle trough, and I discussed that at some length. You can go back and look at that video. I won't repeat all of it, but you must remember a very important thing when you're considering alternate analyses is that sometimes alternate analyses don't affect your trading very much, particularly in terms of the FLD trading strategy, which is why I find it such a useful trading strategy, because our interactions then were A, B over here, with the drop down below it, which is not surprising if that was the trough of the 40-week cycle, which of course it doesn't look as if that was now. That would have been our C category interaction. There's our D category interaction. And so what trade were we considering last week? We were, of course, considering a long E category trade for the bounce out of the 40-day cycle trough. So even though our analysis was quite different, the analysis that we were considering. The trading decision was really effectively the same. We were still thinking about taking a long trade. That's what I love about trading Hurst cycles. It's a very robust methodology in my opinion. Even when you have questions about your analysis, you're still able to make the correct trading decision. The correct trading decision in this case was clearly to enter into a long trade. Okay, and both of our analyses were saying consider taking a long trade at this point. But now there's something else that's interesting to be said about the Nasdaq, and if I zoom out a little bit, I've been speaking about symmetry, and I wrote about symmetry, and I mentioned, you will remember, that if price goes higher than the expected symmetrical price move, and let's draw the expected symmetrical price move here, trying to roughly copy that price move. So the price move from prior to the trough gets reflected in a symmetrical fashion to after the trough, and that blue line that I've drawn would be the symmetrical price move. That's it over there. Can you see what price has done? It has broken up above that symmetrical price move. Now you can tell me immediately what that means. It means that the underlying trend is bullish. So I mentioned that I think that in the US markets that the underlying trend is still bullish. We aren't seeing it very strongly in the S&P 500 or the Dow, but we have seen it very clearly in the Nasdaq. Now, is it possible that the underlying trend is different in the Nasdaq to the S&P 500? Yes, of course. We have the principle of commonality, which tells us that different markets, even within the same country or around the world, tend to move with a great deal in common, but they don't have identical analyses, obviously. And so it is possible that the underlying trend of the Nasdaq is still very bullish, whereas the underlying trend of the S&P 500 and the Dow are perhaps not as bullish, although probably, in my opinion, still fairly bullish. Now let's quickly take a look at the euro to US dollar. And in last week's video I spoke about how we are on the downside of the current 20-week cycle, and let me just say that again, because let me just show you what I mean again, because it's quite an important concept. I've mentioned it already once in today's video. Here, of course, we have a 20-week cycle trough looming ahead. It's very important to always look ahead and see what's coming next. The next event in the euro to US dollar is the formation of a 20-week cycle trough. Now, a 20-week cycle, and there's a 20-week cycle that, of course, has played out up to the next 20-week cycle trough expected in the first week of August. A 20-week cycle consists of two 80-day cycles, and I can draw the M shapes for these 80-day cycles. As I've mentioned in previous videos, the euro has been fantastically clear recently, very nice clear cycles, and so you had a good bullish 80-day cycle. Can you see that? Much higher closing trough and a much later peak, later than halfway peak. Okay, so that is a clearly a very bullish 80-day cycle shape, and that is what I call the upside cycle, or the cycle on the upside of the 20-week cycle. Now we're looking at the 80-day cycle, which is on the downside of the 20-week cycle, right? And again, if we look at symmetry, such an important concept, where the previous 80-day cycle was moving up, we would expect this 80-day cycle to be moving down. So we're currently in the downside 80-day cycle of the current 20-week cycle. I hope that makes sense and doesn't just sound like a bunch of gibberish. So we're in the downside cycle, which means I'm not expecting things to be very bullish. And the euro, there's been such a tremendous amount of news about the euro recently, with the whole situation in Greece, and is Greece going to exit from the euro and all kinds of things. So here is our sequence of interactions. There's our A category interaction. Here's our B category interaction, typical B category interaction, finding support at the level of the FLD, tracking along the FLD for, as you can see, over a week. Absolutely typical B category interaction. Then we get our C category interaction as price breaks away from the FLD, or perhaps it occurred on this Thursday, you could argue that. So that's the C category interaction. Now, what can you tell me about that C category interaction? Well, it's disappointing, isn't it? It didn't go very high. It's not a very good C category interaction. Now, what does that mean? Is it just arbitrary? Not at all. It isn't arbitrary. It tells us that there are some bearish signs in this market. That whereas we've been enjoying some good bullish activity for the A category interaction, the B category interaction looks typical with price tracking along the FLD. The C category interaction is disappointing. A disappointing long interaction means increased bearish pressure. And then we got our D category interaction as price came down into the 40-day cycle trough. And there's the 40-day cycle trough, which formed on the 29th of June, most probably. We could debate whether it in fact formed here on the 6th of July. Let's not go into too much detail in today's video. It's perfectly possible, and maybe we should consider that as the 40-day cycle trough, but let's not dwell on it for now. What follows the D category interaction? An E category interaction follows the D category interaction. In last week's video, I mentioned why I would expect the E category interaction to be a very disappointing interaction. Why? Because we are on the downward side of the current 20-week cycle, and therefore there is definitely increased bearish pressure. Not only are we expecting increased bearish pressure, but we have seen evidence of increased bearish pressure. This C category interaction was a very disappointing one. This D category interaction was a very profitable one. It exceeded its target with its move down into the 40-week cycle. 40-day cycle trough, I beg your pardon. So a D category interaction which exceeds its target, exceeds its move down, indicates the increase of bearish pressure in the market, and it lowers our expectation for the next E category interaction. I was not surprised to see this E category interaction achieve its target, which would have been somewhere up here. That would have been T2, and again we could debate the actual level of the 40-day cycle. Let's not get into it now, but the T2 target was not achieved. That was therefore a disappointing E category interaction. What does it mean when you see a disappointing long interaction? It means that bearish pressure is increasing. The bearish pressure is definitely increasing in the euro, and that's no surprise because we are headed down into a 20-week cycle trough. Here is the F category short interaction. Price basically didn't even clear the FLD. Can you see that? It sort of tried to get above it and then dropped down on the Monday. So it hardly even cleared above the FLD. But that does qualify as an E and F category interaction. Remember, an interaction between price and the FLD occurs when there's a change in the relationship between the price and the FLD. Price doesn't have to cross the FLD. It might come up to the FLD and touch it. It might simply reach towards it, which is called a reaching interaction. And as a matter of interest, you could label the sequence of interactions here slightly differently. This could be A, this could be B, this is C, of course, over here, this is D. If that is the 40-day cycle trough, this might be the E category interaction, which is what we call a reaching interaction. It didn't even reach the level of the FLD. When price doesn't even reach the FLD, the next interaction occurs when price simply moves away from the FLD. So the F category interaction could have been over here, which means that this was the G category interaction and this was the H category interaction. Now that is possible. What does that tell us to look out for? It tells us to look out for a potential A category interaction, which will form after price bounces out of the 20-week cycle trough. Is it possible that the 20-week cycle trough is going to form today or this week? It's perfectly possible. Look at these circle and whiskers at the foot of the chart. These circles tell us the day in which the next trough of that particular cycle is expected. So here is when the next trough of the 20-week cycle was expected. It was in fact the 14th of July last week. Here's the range of time. It's a big range of time. Why is it so big? It's such a big range of time because of the recent strong or big variation in the wavelength of that cycle. That's why it's so big. But of course it must occur synchronously with the 80-day cycle trough. And the next expected date of the 80-day cycle trough is in the first week of August. And so we get what we call a nest of lows, which you can see is centered around about there in the first week of August. That is the most likely time to look for a 20-week cycle trough. But it is possible that the 20-week cycle trough will occur early, and same as I have been saying about the stock markets recently in terms of expecting a 40-week cycle trough, the trough could occur early. Is the underlying trend in the euro bullish or is it bearish? The underlying trend in the euro is, in my opinion, bullish. And let's just go back again, but it's not as bullish as we might expect. It all has to do with the level of the magnitude of this cycle trough, which might be a very long cycle trough, or that very long cycle trough might still lie ahead of us. So it should be bullish, and we have been seeing some bullish shapes, but not very, and the shapes are turning fairly bearish. So we could expect an early 20-week cycle trough. We should stand by, but I would be careful of jumping into a long trade in the euro, particularly with all the news events surrounding the euro. Be very careful of it, because we need to be convinced that the underlying trend really is bullish and that the 20-week cycle trough has formed. Of course, what we're expecting this week, if I zoom in a little bit, is we are expecting a 20-week cycle, a 20-day cycle trough to form. All these weeks and days get a bit confusing. A 20-day cycle trough to form. There's the nest of lows, so it is expected to form now. I wouldn't be surprised to see a bit of a bounce. I will be careful of entering into a long trade at the level of the FLD. I'm going to watch it, expect price to find resistance there, perhaps start setting some long stop entries above a level at which price finds resistance at the level of the FLD, just in case we get an early 20-week cycle trough, but certainly be careful of jumping into that trade. Thank you very much for joining me in the Hurst Trading Room. Please make sure that you go and fill out that very quick survey about us having a live Hurst Trading Room. It would be a great deal of fun. Let's see if we can work it out and find a suitable time for everybody. I look forward to seeing you next time in the Hurst Trading Room, and in the meantime, wish you profitable trading.